Everyone about my name is Diane Basemera and I'm a real estate professional here in Boston, Massachusetts. I do business in the greater Boston area, and I do business with Coldwell Banker Realty, the brokerage here, and I'm a real estate professional or realtor. I enjoy working with investors, with people who are looking to buy homes or sell homes. So anything real estate, I'm able to answer, or I know somebody who can answer your question. Yep.
Thank you. Thank you. Our next panelist is Isaac. Isaac is the relationship manager for mortgages in KCB Bank. He's been working with KCB a number of years. He's well versed with customer-client relationships, KYC. He's also been a premier in this banking industry. He's worked with so many other clients, helping them to build their wealth and build their platform. So, ladies and gentlemen, Isaac.
Yes, thank you very much. Thank you very much, Joe. As you've heard, my name is Isaac Muchi. I'm representing KCB Bank. I manage mortgages. I have a very vast experience in mortgages. I have dealt with so many developers, so many customers from within and abroad. So we are excited as KCB Bank to partner with whichever customer who would love to work with us, and any partner, developers, real estate agents who would want to work with us such that we can develop the nation, develop individuals, and we go and we win. All of us win, because as an individual wins in terms of acquiring the property, managing the property, the bank also wins because they take on the customer and we all win. So it's a win-win situation. I'm very much excited to be on this panel, and I'm thinking that I'll give the right information to the audience. Thank you very much, Joe. Thank you for having me.
Thank you so much, Isaac. Next, we have Councillor Daniel. Councillor Daniel has worked with Aban David Africa. He was on last month, gave us a really good topic in terms of risk and navigating the risks in the real estate market in Uganda. He's going to give us a brief recap of what we talked about last month with just 2-3 minutes, because there's been a lot of demand on that topic. We'll probably set up some time again to talk about the risks that are involved in land acquisition, land transfers, and all that. So he will give us a brief recap of what we talked about, and then he will introduce himself to the audience. Thank you, Councillor Daniel.
Good evening, everyone. I hope you can hear me now.
Yes.
Yeah, good evening from Uganda. My name is Daniel Lubogo. I lead the Aban David team in Uganda as a managing partner. Aban David is a law firm that is present in Uganda and across Africa. We are proud to say we've been listed as among the top 50 law firms for the past 5 years by Africa Legal, and we've also won the 2021 Africa Large Law Firm of the Year, which is one of the highly prized awards by Africa Stock Elite Firms. So we are glad to work with KCB in this partnership, in this conversation with people in diaspora to share insights within areas where we can support people in diaspora in the real estate sector, and quite a number of other engagements. Do you want me to go through what we discussed last time now, or that will come later on?
It will come after Haj is here. You'll give us a recap, and then thank you. Thank you so much, Councillor Daniel. And then lastly in our panel, we have Haj Zahil. Haj Zahil has worked with Lamar Residents. They're one of the premier developers in Uganda. He will give us more details about what they do, but I can give you a brief. This is a team which will help you get your property developed. They have ready properties that are ready to go on the market. You can buy into some of them directly. You can invest with them, work with them from the ground up, or you can buy an already made property. So he's going to give us a brief about what they do, and why he's interested in Uganda. He has so many developments going on all over Africa, but want to hear about the tech and the special sauce that's happening in Uganda right now. Haj Ahmed.
Thank you, Joe. Thank you, Joe. Good evening and good morning to everyone, to all our panelists and audience. Thank you for having me here. Thank you for the introduction. Just maybe to summarize our real estate background, I would say that we do real estate with a very real state of mind. So we are based in Uganda, we are based in Kenya, we are based in Dubai. Currently, we have many projects going on in Uganda, in the condominium apartments side, whether standalone villas. So we have a large portfolio, and we are, well established in Uganda since 2008. We are very proudly partnered with KCB Bank. It is one of our most premium partners, where we are helping each other, accommodating the customers for KCB banks, or our customers also who want to have mortgage facilities. We bring them to KCB Bank. We have a large diaspora market. In fact, we did the last event in US, which was the UNWA event. We were there and we got a very positive response. We were in the UK also in the month of September. We did the UK-Uganda Trade Summit. Then we went to Netherlands. We did the Uganda Business Convention there. So humbly, we are quite established, and especially we are trying to cater our diaspora market. People who are in diaspora, and they need credible people, they need honest people, honest developers who can help them facilitate in their housing needs. So I think thank you again to have me here. It's a pleasure.
Thank you so much. All right, again, please understand that this is a cross time zone call. We have some members where it's evening time, some members where it's morning time. So we thank you so much for being able to spare your Saturday with us, taking this time on to join us and discuss this key issue. So without further ado, I'm going to jump into, I'll introduce myself. I'm your moderator today. My name is Joka Kumerizi. I have a relationship with KCB Bank as their brand ambassador for the diaspora. I've been in the US a couple of years, and I've worked with KCB Bank through different engagements, and I'm very proud of the work they're doing and all the community engagement they keep doing to help the diaspora to engage into different aspects and grow the community. So I'm very proud to work with KCB Bank. And as you hear, you'll be getting to know some of the products and services that they can help you with to develop your wealth, to grow your real estate knowledge, your investment opportunities, and so on. Without further ado, like I said, last month we had a topic which was to do with the risks involved in real estate market. There's a lot of scams that we've had, lots of pain that's going on in the diaspora, even in the Uganda market. We've had a lot of fraud, a lot of litigation and lawsuits. So we had an opportunity to discuss with Aban and David about some of the risks involved, some of the premier statements that went on in the market. So I'm going to give Councillor Daniel an opportunity to just summarize what we talked about last month for those of you who are not present, before we jump onto the next step, which is discussing the opportunities. Because we want to know that before you even know about these opportunities, we've covered the risks. We understand there's lots of risks in the market. We understand that there's a lot of speculation, a lot of unanswered questions. But we want to make sure that everyone here has confidence in the team, has that faith that the team they're going to be dealing with is going to take care of their priorities. So, Councillor Daniel.
Thank you so much, Joe. I will not go into the details because it's a recap, but glad to have the opportunity to share exactly what we had the previous month. We basically discussed about developments within the real estate sector, but mainly the transactions, what is happening, what are the developments from a regulator and judiciary point of view, what are the developments that the courts are saying. But in principle, the process of transferring title has now changed. There is a requirement now for physical attendance of the buyer and the seller at the registries. The reason why this is important now is because of the ongoing increase in fraud. So the policy makers, the government, and as well as the registry is insisting that for you to transact in the registries in Uganda, there must be physical attendance. And for those who are not physically present, if you're giving a power of attorney to someone, it must be clear, it must be authenticated by the national IDs or the passports of those who are transacting, and the documents must be registered with URSB. As a way of avoiding those who are evading taxes, it's now a requirement that both the seller and the buyer must have a TIN, a tax identification number. And this is for purposes of tracking the transaction and ensuring that no one avoids the taxes. The courts have also interpreted that a person who avoids taxes, because we see this a lot, I mean, someone could tell you that, no, let's find ways of indicating a lower value on the transaction so that the transaction can pass. But the courts have interpreted that if you under-declare the taxes, the transactions becomes completely invalid. So to avoid all that, you have to really be smart. You have to do things in accordance with the law now and the regulator. The third requirement is the standards on due diligence are now a little higher. You're not going to say that you did not know what was on the property before you purchased it. The courts are saying that you must actually visit the property, establish who is there, what a prudent purchaser must do, and what a prudent seller must do. The standards have increased to require that you must know exactly what is happening on the land. And I did indicate that there are quite a number of transactions now that we're advising our clients that when you're going to purchase property and the title has just been created, it's a new title just in one name, it's advisable that you do a background check. If possible, go within the registries and establish where was this title created from, who was the owners of this, what was the basis of the mother title. Because for a fact, there are quite a number of people now who are creating a lot of special certificates of title under the pretext that the title disappeared, but when it is actually fraud. So you need to go into the details because, when someone challenges your title, you end up losing quite a lot of money. The third is regarding the administration of estates. The new law now, which is a 2023 amendment, requires that if you're an administrator of an estate, you have to file inventory within 6 months. If you do not file the inventory within 6 months, you must file an application before the court to actually give reasons why you haven't done it. And it must be, you must give reasons to the beneficiaries why you haven't done it. The law also now has indicated that you can only be an administrator for 2 years, because previously you could be an administrator until you pass away and even your children become administrators. But the law is saying that given the experiences that the society has had with people who are taking over rights as administrators, it's important that within 2 years they evaluate whether you have actually done your mandate in fulfilling the obligations and the responsibilities that you have as an overseer for the family. The last issues that I will tackle, since I'm just rushing, is the question of family land. The position of the law now is that, which is also part of the 2023 amendment within the Succession Act, is that you do not have a right as the father or the heir to evict someone who is like a widow in the property, if it is family land. And the husbands are required now that when they are making their wills in succession, they must indicate the rights that the occupants of the properties will have upon death, because there are quite a number of scenarios that the regulators and the courts have been observing where people pass away and widows are evicted in their property under the guise that the person who has taken over is an administrator of the estate and is the heir who assumes that the property belongs to him. So I've virtually touched here and there, but we can as well share the insights like we did in the presentation for those who might want them. Thank you.
Awesome. Thank you very much, Councillor Daniel. I appreciate it. And like I said, after this cycle, we'll probably get some time again and go through the risks again as we get more people get on board and get interested in the market. So this is going to be a fireside chat, panel discussion. So feel free to drop in your questions in the chat. This is going to be a discussion. Feel free to drop your questions and we'll add them as possible. So the first discussion topic that we have is understanding the Uganda real estate landscape. And so I'll start with Mr. Ali here. So having been a developer, having come all the way as a developer, what made you decide to come to Uganda, and what are some of the opportunities that you're seeing in the Uganda real estate market?
Thank you, Joe, again. As I told you earlier, we are based in Uganda since 2008, and we have quite, prominent portfolio here, whether in real estate or in the development side. This is one part, but what brings us and what is the potential of the Ugandan market is that, we are in deficit of around 900,000 units today. And again, in the newspaper, there was a big, on the front page headline that Uganda is having a serious deficit in the housing industry. And not only, now this brings a challenge. This is, we are talking about the housing industry, which is the, affordable housing, then even the premium housing also. Now, a lot of, Ugandans who are abroad, they face a serious challenge in terms of, getting a second home in Uganda. It gives them a problem, when they want to be, putting up a standalone house or, managing that property becomes very difficult. But when you are, having condominium apartments, or you are in a society or in a estate, it becomes easy to manage. So Uganda has a great potential in terms of, property investment. Even if you calculate the return of investment in Uganda, in the real estate is much higher than, other countries in East Africa, whether it is Kenya or whether it is Tanzania. So the returns are very high for the investor also, not only for the developer, because developer is producing a product from raw material to the end, but it has, different segments, and, an investor can gain his interest, then the second investor. So it is a complete process where at least 3 or 4 people can juice out that property until it goes to the last, end user, who becomes as a final resident. So Uganda has a great potential in the real estate sector, and eventually, after 5 years, 10 years, you will see that there will be a serious shortage of land, because Uganda is not a very big country in terms of the land area, and our population is growing very fast. And this new population which we have, you can say the ones which are between 20 years to 30 years, which are doing good jobs, and when in the next 5 years, 10 years, when they have some good money on them, they also have a demand, and land is decreasing and the population is increasing. So it brings a great value, to us as a developer also, to cater the needs of people and to produce some quality product which could be of some use to the end user, our customers. We can deliver them good product, something which is tangible, something which is very concrete, something which is very long lasting. So Uganda has a very good potential in the real estate market, even for people, if someone is investing money. And plus, Uganda is a tourism country. If you have some good properties, you can use them as short-term rentals, as maybe the new business which is there, maybe putting it on Airbnb, Booking.com, things like that, apart from long-term rentals. So in Uganda, property is one thing which never gives you a loss. It only appreciates.
Awesome. Thank you, Ms. Ali. And just before I leave you, when you, I heard comparison, but I'm Ugandan and I like it. So comparing with our neighbors, what do the returns look like in Uganda and say Kenya or Southern Sudan or Tanzania? Well, just rough numbers. What do the returns look like?
This is a very interesting and good question. You see, Ugandan market is not a saturated market. Ugandan market is a developing market. If you currently see the economic situation throughout the world, US, Europe, Asia, even if as of I would like to start from the broader perspective, and then I will narrow you down on a smaller way. So if you see the global economy, it is very bad as of this time when we are talking now. But if you see the repercussions in Uganda, they are very minimum, because Ugandan economy is a cash-based economy. There is no concept of credit here. Very minimal. Everything is on cash. So when there is an economic crunch throughout the world, the impact on Uganda is very minimal. So this is one thing. Now, if you compare the Ugandan market with, suppose I compare it with the Kenyan market. Kenyan market is a very saturated market, very well-established market. Even the concept of condominium apartments or the apartment living is very old in Kenya rather than in Uganda. When you tell someone, not to our diaspora people, but to the people who are living in Uganda, if you tell them, I want to sell you a condominium apartment, or I want to put you in an apartment, they are still in the evaluation and evolution process where they are thinking, okay, someone can stay in a shared place also in a building, and they can own that property. It will be as legal as a plot in Chira or as a plot in Namagongo, where you can put up a house. So this is an evolution process. So this is one part. The second part, since Uganda has limited land resources, private land, I'm talking, and the property is limited and the population is increasing, which means eventually in 10 years of time, 15 years of time, or even now, the property appreciates very high. Even now, suppose example, the current projects which we are selling, there is a minimum ROI which sounds very, unrealistic, but to be honest, on the market, it is realistic that if you buy a property with a developer, you can make at least 30 to 40% return within a year if you are with the developer from the day one when he started the project. Even if you buy a property, suppose in X area of Gayaza, you keep that property, and after maybe 1 year, that property will appreciate by 10 to 12%. The reason being because Uganda is growing. It's a growing economy. We have a middle class which is upcoming. We never had a middle class here. In past 10 years, I never saw any middle class, but now we have a middle class. We have educated people. We have people having good jobs, people who have the capacity to put some money. They can buy a car of 50 million. They can a house of 120 million. They can get mortgages. Banks are playing an important role in this. KCB Bank is there. Many other factors are there. Lending has become easy. Mortgage facilities are more to the corporate people who are doing jobs. So if you compare it even with Kenya, the ROI is maybe thrice, if not twice, if I'm not exaggerating. But I'm telling you out of our experience in Kenya and here. So the returns are very high even for an investor.
Awesome. Thank you. That is really great insight. And I'll get back to you with more in depth. Isaac, this is where you jump in. And the question here for you is, how is KCB enabling both the diaspora and the Ugandan market to jump onto some of these opportunities? We've heard of so many foreigners coming to Uganda and buy a lot of property. We've had our friends from Ethiopia, from Eritrea, from Nigeria coming, buying all this real estate. How does the diaspora and the Ugandan community benefit from a partner like KCB?
Thank you very much, Joe. I would like to say KCB is proud to have a department which is called Diaspora Banking, and through that department we support Ugandans who are abroad. We love to move with Ugandans who are abroad, and we support them to be able to acquire property even when they don't come back to Uganda. So if a customer is abroad and probably has never banked into any African bank or Ugandan bank, we support them to open accounts with us through the diaspora segment. We have a dedicated relationship manager who manages diaspora clients, and she supports in getting all the KYC to enable them to open accounts in the bank. And over and above that, we also support them in connecting them with developers in case they want properties that are already developed. In case they just want land, we also connect them with agents or real estate agents or developers who have bought chunks of land and subdivided, and they're selling them in different portions. So we connect them, and they are able to buy those properties, either by cash, that is if they have collected their money and they are willing to pay by cash, or if they are willing to go through our mortgage financing. And through the mortgage financing, we support them, and we move through the journey from the time they get interested in buying the property to the point of acquiring the property and probably letting the property out if they're not going to stay in there. So I would like to say that KCB Bank is very huge in diaspora banking, and we believe that we love to support the diaspora community to be able to feel at home even when they are not at home. Thank you.
Awesome. Thank you, Isaac. And there's a question here which I'll let you knock out as we go on. So someone has asked a quick question. What are the current interest rates for the diaspora community for mortgages?
With loans, we lend in both UGX and USD. So I'm assuming that we are only going to lend to USD because the customers we're talking about are from the US.
Let's talk let's cover both.
Both, okay. I'll start with USD rates. Apparently we lend at about 11%, 11.5%, depending on how much you want to borrow. But we also look at your cash flow, the stability of the cash flow. Is there any risk? If there is little risk, then we can lower the rates. But for starters, we lend at 11.5, right about there.
And
then
for what duration? What's the duration for that?
Yes, for USD loan, we go as long as 10 years if you want to buy a property. So we go as long as 10 years, and we try to and that rate is stable for that loan period.
Awesome.
So it's normally stable. So we try to support our clients in that regard. For UGX, Ugandan shillings, the pricing has been a bit volatile. So it has risen up to about 18-19%. But with the new pricing that is coming up, we are targeting to lower it to about 17.
Thank you.
Probably by the close of the year.
Thank you so much. Again, Isaac will give us more details and contacts for people here. KCB has also a diaspora chat on WhatsApp, so you can reach out, ask questions, and you can get answers. But if you don't want to talk to a chatbot on WhatsApp or to get answers through WhatsApp, Isaac will give us contacts. You can reach out to him. He'll be able to guide you through the process. Thank you again. Appreciate that, Isaac. As we talk about interest rates, we are going to jump to Diane, who is our resident broker here in the US. Diane, you've been in this market. The interest rates have been increasing in the US here. Does this offer an opportunity for your clients here in the diaspora to think about investing back in Uganda? Is there an arbitrage opportunity that you see that exists in this market?
That's a great question, Joe. Thank you for asking. With the increased interest rate, so first of all, people were spoiled with the really low interest rate we've been having, which was, it went as low as 2%, 3%, 4%. Now we are at 8% as of today. What we are seeing in the market is, some buyers are dropping out of the market, especially first-time home buyers, because, that automatically changes the mortgage payment. And for the rest, it's just an adjustment of the type of property you're going to acquire. Whereas 2 years ago, maybe you could have afforded a certain price point. Now you're in a different price point. The good thing is that you can always refinance when it adjusts. The idea is to keep track of the market. Your question was, does this pose an opportunity for people to invest back in Uganda? Well, Joe, that's such a biased question for me, because I'm always going to look at it as location. what is the return of investment in investing here in the US, regardless of the interest rate, because you can refinance it or you can buy the rate down. You know, there are ways in which you can browse the current situation. I always look at it as, I take it really, one of the jobs that I do is to take it really personal. Why do you want to invest back home? What's the motivation? If it is your first home and you didn't have a home, yeah, it's nice to have a good vacation home. Kampala is a great party destination. But the other thing could be, I'm just looking for a place to put my money. I've saved up a lot of money. I have 200,000 US dollars, and I'm thinking, should I go invest it back home or should I buy an investment property here? Again, we're going to have a different conversation with that type of person. Of course, the return on investment is higher here because, I mean, $1 is worth 3,750 Uganda shillings. That speaks for itself. I'm speaking to the diaspora. Okay. And again, you don't have to have saved 200,000 because if you're going to buy a 200,000 property, you're putting down, you know, as a first-time home buyer, you could put down 3.5%, which is, I don't know, Isaac can calculate for me as a mortgage lender, but the question is it presenting an opportunity? It always gets personal to me. What are you looking for? What are you looking to do? If you're an investor, you want high return on investment, buy here in the US.
Awesome. So good. Like I said, this is a discussion of how do we get people in the diaspora interested in the Uganda market, right? If you're comparing interest rates, it becomes a clear yes/no question. But when it comes to diversification, you want to diversify your portfolio. Maybe you think the interest rates are going to go higher. In the US, we've heard about the Fed thinking about increasing the interest rates to hit 8%. Maybe that offers you an opportunity to go back home and invest in Uganda. If you're thinking of retiring, right? You're a Ugandan who is planning to retire in Uganda, and you want to get a head start, get a property, get a head start, and start building it. By the time you go back home, you've already cleared your mortgage with Isaac, and you're ready to go. All right. So good discussion again. We're going to dig deeper. I know Diane has an interest rate calculator that she's going to share with us, compare and contrast the return on investment. Because some people here, I see like Moses Wilson, who is a veteran in investment and real estate here. Some people are interested in the numbers. What's the ROI? What's my IRR when I invest in both of these markets? We've had that Mr. Ali says you can get up to 30% return on investment. So the interest rate might be high, but maybe I'm getting a better return on investment when I invest in Uganda. Right? So I might be able to buy a property in the US, but if my return on investment is 14%, and I'm getting 30% in Uganda, maybe it's a better return on my investment by investing in Uganda for the long term compared to investing in Uganda. All right, good first round. I hope the panelists are warming up. All right, we're going to round two. Next question is going to be about financing and the opportunities that are available. So I'm going to start with you, Isaac. Zahil has told us about some of the opportunities. There's an apartment block for $300,000 in Uganda, or just a unit for maybe $60,000 that's available. What are some of the financing options that you can help? Not everyone is lying around with a bag of $200,000 in their mattress or in their bank. What are some of the ways you can help soften the financing to get into some of these deals?
Thank you. There are basically 2 or 3 options. For example, by policy, we request the customer to always contribute a bit of, say, 20% of the purchase price. But in some cases, the customer may not have that money. If a property is being sold at around $100,000, 20% is quite a bit. So what we normally tell them is that if at all you have an extra property in Uganda somewhere, probably a piece of land, bring it and you add on your collateral as security to cushion your contribution. You get it? So, we can finance the 80%, or we can also finance 100%. That is if you cushion your collateral a bit with additional security. Then the other opportunity is that for
Isaac,
for those who are.
Isaac, can you expand a bit more on that point you've just mentioned? I think it goes without saying that it's a very important point that you might have land or somewhere, you have a piece of property. Instead of sitting on that property for 20, 30 years, how can you use that land to evolve and start getting cash flows? Can you expand on that point a little bit more?
All right, there are two bits. You already have land, okay? And one, you want to buy property. Then you may have land, but you want to develop it. So if you want to buy property and you already have land, you may not need we may not need your contribution. So you get that land to cushion your 20%. That land to cushion your 20%, such that it adds onto the property that you're buying as collateral. Then if you have land, probably you want to develop it, you want to put apartments therein, then we can get a plan for you through our partners. You get an approved plan, and then you start developing. Because you already have land in probably a prime area, when you value the land, the value that comes through is good enough to have substantial disbursement to enable you start on the project. The only problem is that if the land is far-fetched in a remote area and the values that do not come through, it is going to be hard for us to finance a big portion. So we normally advise, if you're constructing, make sure that your land has reasonable value for you to have a significant portion of disbursement to have the development come. But what we do as KCB, we try to tailor the disbursements in phases to enable us monitor the projects in phases. You can say you're building a 4-story block. Then we start disbursing in 4 phases. With one phase, you start on the ground floor, second phase on the first floor, third phase on the third floor, and so on. So we disburse in phases because we want to monitor the progress. And also, as we disburse, we do a revaluation of the property, because we assume that whatever you put on the property increases the value to enable you to have another tranche of disbursements.
Awesome. Thank you very much, Isaac. I'll come back to you to go into detail in regards to how do you partner with developers like Mr. Ali to do the disbursement, so that when someone is in the diaspora, they're hands-free. They don't have to worry about the bags of sand, the bags of cement, the trucks of sand that might disappear, the rebars and things like that. How you guys bear the risk to help with that. There's a quick question here that on Moses is asking, and I'll go directly because it ties into with what Haj Zahil, my question is. When it comes to construction and financing, what have you seen has been the best opportunity that's available? Has it been apartments versus condos? There's so many different building designs that we have on the market. What have you seen as the most popular and the better return on investment?
Joe, I would like to add 2 points, on Isaac's discussion. You see, we are talking about the interest rate example, for mortgage in Uganda, as USD is talking about 11%, or for UGX is around 17 to 18%. In my 20 years of experience in real estate, only 2 things matter. One is the location, and number 2 is the numbers. Now, if we talk about the numbers and we even ignore the location, the minimum return of investment through rental in Uganda, which is offered, is in between 12 to 18%. Let's assume that, you are taking a mortgage on 11% as a diaspora, and you are getting a rental return of 12%. You are paying the bank 11%, still 1% you are retaining in your pocket. Eventually, in a period of 4 years or 5 years, that property is free from the rental income which you have made. You are raising up 20%, right? And the minimum return on investment, as you are an investor and you are keeping on a short-term investment, say short-term investment, I mean between 1 year to 3 years. You buy a property of $100,000. In a period of 3 years, you appreciate it by at least 20% in a year. You already have appreciation of 60%. So, if you compare Uganda, the appreciation in property or in terms of the rental income, it is very difficult for any country to match as of now, even though the mortgage rates in Uganda are very high compared to the other parts of the world. But still, there is a deficit of availability. If you are talking of a unit of $100,000, this means in Uganda, you're not talking of something which is just like taka taka. You're talking about a premium property, at least, $100,000 is right, 400 million shillings. So you're talking something which is on a prime location, which is something which is going to give you a good return. So coming back to that point, still, I firmly believe, even though the mortgage rates in Uganda are very high, but there is a lot of potential because the rental returns are also higher at the same time. This means your cost of operation is high, but your cost of return is also high. So it is some kind of a mathematics which someone needs to go more into detail. Now, coming to your question, that what is more famous in simple words, like maybe apartments, condominium apartments, or standalone villas. You see, apartments is something which is very easily manageable, something which is very affordable, something which is durable, and something which gives you appreciation on your investment also. I would not say that standalone houses are something which are not in demand, but people are moving from standalone houses and going towards apartment living. As I told earlier, that Uganda, as the new generation, as we people, we are coming up, there's a new trend. Like the apartment industry in Kenya, I'm giving reference of Kenya again and again because we are based there also. So Kenyan market is very established. If you go to Kenya, you go to Mombasa, you go to Nairobi, you go to any other city, you will find 80% of the inventory which is there for housing is apartments rather than the houses. So apartments is something which is very, very easily maintainable. If it is a 2-bedroom or 3-bedroom, your cost of operation of that property is very low. Your resources which you use, like maybe power or water, it is very controlled. If you are a family of 1 to 4 people, you can manage yourself very easily in that property. You can maintain it very easily rather than having 100 by 100 decimals plot, 100 by 100 feet plot, and a 4-bedroom apartment on that. The place is very big to manage that. So in short, I say, our experience with the apartment condominium process is people are more receptive to it, and especially the diaspora, because for diaspora it is very easily, someone sitting in Boston can buy a property here with any apartment. He can come here on the Christmas time, spend 30 days, lock the apartment, go back to US without any worry that someone is going to enter my house, maybe going to take over my house, or someone is going to have any issue like that, maybe a theft. This is not happening in apartments. So it's something which is very safe and something which is very easy to maintain rather than a house. So I would say again, our out of our inventory, people are more receptive on the condominium sites, condominium apartments.
Awesome.
And that's the future of Uganda, to be honest.
Thank you very much. And for Councillor Daniel, I'm going to tie my next question with a question from the chat about the rental income tax and the risks that you might see. So For you, Councillor Daniel, how do you see some of the opportunities within the real estate sector from a legal point of view? Talk about the taxation, the tax laws that we have. What are some of the opportunities that present themselves for example, maybe for an investment club or an LLC? How can they be able to navigate the tax structure to maximize their returns? And what are other opportunities that you might see in the market? Councillor Daniel, can you hear me?
Yes, I can hear you. I hope you can hear me loud and clear.
Yes. Please go.
Before I can get into the issue of taxes, I thought I should give a little bit of some background to put the debate into perspective. I happen to have been part of the Africa Business Forum just a few months ago in Singapore. And if you notice, for the guys in the diaspora, there's a growing interest now for most of the global players to get into Africa. It's not by coincidence. Most of the focus right now by most of the biggest companies and the biggest investors in there is actually in the emerging markets. And the rationale for that is that, I mean, long term, the return on investment cannot be computed with the markets that are saturated. And I'm happy that Ali spoke about it. When you put it into perspective with some of the things that are happening in our market, for instance, within the space of the ESC, the East African Community, because the governments have agreed that people should get in and work in spaces from one country to the other, you'll find that within Kampala, just alone within Kampala, there are quite a number of people from South Sudan, people from Eritrea, people from Congo that are living in the suburbs of Kampala, and somehow it has increased the demand for housing vis-a-vis already the locals that are living within the city, and many of the young people who are now interested in living in spaces that are more organized than it was in the previous past. If you juxtapose that with the population, just with the population and the projections that the government has, and the fact that, I mean, about 2, 3, 4 years back, the only city that you had within Uganda was Kampala. But right now, if you look at the projections and the amount of people that are staying in Mbarara, and the way Mbarara, the way Arua, the way Jinja is developing, in terms of the shopping malls, in terms of the populations, I mean, if you're someone who is looking at making business in the long term, I mean, notwithstanding the taxes that are available, it makes a lot of sense. I'll give another example of the infrastructure developments that are happening from, I mean, you've looked at the side of the northern bypass that has just been constructed in Kampala, and the developments that have happened from Nigeria. It's now stretching towards Bulindo and the far side of towards Kalaji. And you just because, I mean, there's a northern bypass that now connects Entebbe to Weogere. But now, as we speak, there is an ongoing development that is connecting the southern bypass, that is from PG to Entebbe and Mukono, that will interlink with the Jinja Highway. I just felt I should put these developments into play because as people in the diaspora, you need to be practically knowledgeable about what is happening and the fact that some of the opportunities that are on the market are actually being taken over by foreigners, as opposed to people who should have come here and taken benefit of the opportunities that are around. And you make quite a lot of money. I was in Singapore, but there are quite a number of actually big players that want to enter our markets and take benefit of the opportunities that are within the real estate sector. I felt I should put that into perspective to just highlight the debate before I get into the taxes that you asked me. So for taxes, of course, foreigners in Uganda, just like anyone in any other country, subject to paying taxes. You all pay income tax, you pay the rental tax, as well as the capital gains tax. Of course, for income tax, there is a standard 30% income rate that is imposed on corporations, both resident and non-resident. But you see, depending on the way you've structured the company, there is a way you can leverage on the taxes that are available. So beyond just saying that the taxes could be a lot, you need to get support to leverage on the direction you want to take vis-a-vis the laws that are available. Otherwise, I'm sure even in all the economies where most of our people are, the taxes are actually there. The only issue is how do you structure your company to take benefit of some of the privileges that are available within the tax regime. For instance, if you're Ugandan and you incorporate a company within Uganda, you will not pay like a foreigner. Yeah. Then there are declarations that you can make. Right now, as we speak, there are declarations. There is a waiver that the government has given for companies that have been making losses for a certain period of time. So there are quite a number of privileges that you can take benefit of if you're a big investment company in the real estate. There are opportunities for foreign investors that you can take benefit of, and they are being given quite a number of players on the market. So it's a question of, one, understanding what is available, understanding the benefits that are available, and getting the right people to support, the professional people to support you while carrying out your businesses. Yeah, that's my take. Yeah.
Awesome. Thank you so much, Councillor Daniel.
Yeah.
And back to you, Mr. Yan. So the question for you, it's in the same discussion, right? But I'll add a small twist to it. What opportunities do you see for someone, because people have different investment cycles. Someone who is retiring or about to retire will have less risk appetite compared to someone who is coming out of college, 25-year-old, can take in as much risk as possible. So they might not jump onto the Ugandan opportunity immediately, but maybe US offers more stability, less risk, and more reliable cash flows. So take us through the opportunities that exist in the US for the Ugandan community, both the diaspora and the people in Uganda, and how can KCB capitalize to support the diaspora to tap into these opportunities?
Okay, cool. Thank you for the question. By the way, it's nice to hear the updates from Daniel and Isaac. It feels like Uganda is improving with different systems to reduce the risk, like he's talked about the title search, working with the professionals. That there is really a level up for the real estate community. But anyway, back to what opportunities are there for the diasporans in the US. So there are a lot of investment opportunities. Real estate is pretty wide, by the way. That's why I really like it. And that's why you see all of us here, we're in real estate. You see that developer, there are development opportunities in the US. In fact, Haji, I invite you to come over to the US and see what you can do with that money as well. The return is incredible. You can diversify your portfolio and not just invest in develop Uganda, but there are still development opportunities here in the US. And we see that with the changing population. You've talked about the condominiums now happening more in Uganda because of that rural-urban migration. Everyone wants to be near the business center. So we have to find a way of fitting everybody in condos. And such is the same here in the US economy. As you move closer to the business centers or the cities, you will see that. And then you also see multi-family investment properties. That's one of the opportunities that's there. Joe, you asked about the opportunities. A multi-family investment property is, it's a residential building where, you have like 2 to 4 units, family units. The idea is that when you put a down payment on that property, that could be anywhere, again, location will determine what's the value. It could be anywhere from 300,000 to $1 million, 500,000 plus, add the zeros as you need to. The opportunity on an entry level is, say, if we identified a 300,000 investment property that has multi-family units, you put down maybe 20%. That's the minimum required for an investment property. 20% say of 400,000. Gee, I should have opened my calculator. Hold on. And I'm keeping it very simple. Divide by 20%. 400,000 times 20%. So for a property like that, you need like 80,000 US dollars as a down payment. And then you have the renters helping you pay off that mortgage. So that's a very nice, easy entry into investing in real estate. You're working with your tenants to pay off that investment property. In about a year or two, you could have already paid off, got back that 80,000 that you initially added as a down payment. And so now the business is going with the support of the tenants who are paying your mortgage. So that's one of the many ways on an entry level. And then, of course, as you get more into it, you're owning more and more properties. And then for the people who are interested in development, there is always repurposing as people's lifestyles change. You'll find that some multifamily properties here have been turned into luxury condos or just condos. So there is a lot of opportunity, and the return on investment, it's determined by location. Yeah, I prepared that. I should have shared. So, yeah, so that's the opportunity. Again, I picked up a few towns, and this is Massachusetts. I created a very basic investment calculator that, of course, as we get into it, we can break down, which money is going where, but different scenarios, different price points. I was talking about, a 400,000 property. I can't control, can I? But if you continue the slide, you can see that if you put 20% down for the first property I'll talk about, it's 92. In a humble way, I will not get access to the recordings. Okay, sure. I'm sure Joe will take care of that. So then you have your mortgage payment of 368, your monthly payment. I wish I could control this, Joe. Let me see.
Yeah. Oh, if you want to take over the screen, that works.
Yeah, but I don't know if I'm getting so much in that. Did you want me to dive in that far?
No, please. I just wanted to show that the analysis that you had on the side.
Okay, yeah.
But feel free to go ahead with the discussion.
And then even just owning a home is an investment in yourself and your family, Sometimes, these price points look crazy, but we call it generational wealth that somebody has to start somewhere. You may not be an investor, but you may want a simple, nice home, and you're going to just invest in the improvements in there to improve the value. Because you have to be careful with which type of improvements you're making. Some do bring back a high return. Like, for example, updating a kitchen or bathroom is more exciting to people when it's time to sell. What opportunities for the diasporans here? It's real estate. The economy here is different from Uganda. There are laws that are protecting you. You're not worried about the title. There is title insurance. There is, you're working with professionals, inspectors, real estate professionals like attorneys. We work closely with mortgage lenders. There is a lot of opportunity. And again, location. The US is an economy. It's a business center, and that's why it's really highly desirable. And the dollar will speak for it. The dollar versus the rand, the dollar versus the euro, the dollar versus the shilling. So again, it gets back to, it's very personal. At what stage of life are you? I'm tired, I want to retire. I need a nice home in Uganda. Talk to Haji. I'm energetic, I want to make real money. Talk to Diane, we're going to invest in the US. Let's bring that money here, dollars. I want to take it easy. I just want my simple condominium in Uganda. When I go visit, I don't want to worry about thieves. I don't want to worry about who. I just know that Haji and he's in the empire, they are managing my property in the condominium. I have nice views, maybe, some mountains, some penthouse views because you're in a condo. So it always gets back. It's so personal, and that's why I love real estate. But the most important thing is that everyone is winning, no matter what level you are, whether you're a developer, whether you're an investor or just a homeowner, and the location determines the return on investment. You know, the return on investment you're getting on 50,000 in the US versus 50,000 in Uganda. Let's check that dollar. I'm not trashing anything or rubbishing anything. It's just, what is your need today? I need this. I'm slowing down. I'm high energy. I'm dipping my toes, you know.
Okay, so we're halfway the discussion, a little bit over halfway, and I think we have a really good question from the audience. I'll ask Moses. Do you want to jump on and ask this question, please? Let me see. It's a really good question, and I would want, if you don't mind, to jump on and ask. Yeah. The audio is not coming through yet. Yeah.
Can you hear me now?
Yes.
Okay. That was because of the earphones.
Yeah.
First of all, thank you, Joe. This is an excellent forum. Like everybody else, I'm here to learn. I know I'm asking a lot of questions. That's because I'm very, very excited and I really want to know. I am very, very heavily invested in real estate in Uganda. And I have been trying to encourage my co-diasporans here to join with me in doing so. I see Uganda having tremendous potential, and everything you have said, and that has been said by everybody else, has been right along the lines of what I expect. And so the question, you're asking a question. Let me give you a real life example. I and a number of diasporans came together. We have a piece of land. We're valued at about $300,000. We're spending $400,000 to build 8 condominiums. We expect to sell total for $1.2 million, giving us a gross of $500,000. If we take the same money and invest again, in about 4 to 5 years, we can turn our $700,000 into $2 million, can yield $1 million profit. So the alternative is for us to take that, to put it in Uganda Treasury bills. Again, something that I happen to like very much. The return is very good. And it would give us an annual return of about $50,000 a year. It's a plus. What I'm trying to do is, can one of you professionals comment on this and also do it with regard in comparison to apartment investment? You keep saying that if you invest in apartments, you can get your investment back in 5 years or in 10 years. Whereas if I do it in condos, I can do it in 4. Am I just being optimistic in the wrong way, or is something I'm not seeing? And one of the things that really scares me is that 30% taxes. Please just comment. I'm here to learn. That's what I want to do. I'm approaching retirement age, like Dan has said. So I'm strongly looking at transferring what small wealth I have here in the US to Uganda. And I really want to see what the professionals have to say. Thank you.
Awesome. Thank you very much, Samoses. Samoses is one of the premier investors in the US and has impacted a lot of knowledge to people like me. He's inspired me to join and be part of the community, to volunteer. So I'm whenever he's speaking, I'm listening and learning a lot. So he has a very good question there, and I think Mr. Zahil, you'd be a good one to take it on. What are your views on Mr. Moses' point? He's saying he's comparing condos and apartments. That's one, and in terms of return, turnaround of cash on cash return, right? It's putting in 700K, getting 2 million after 4 to 5 years, compared to apartments. What's your take on that?
Before I respond to a very interesting question by our friend Moses, there is someone who has asked a very nice question on the chat, that we in diaspora don't trust, Ugandan folks who are there in the business community. Have you gone through that message? Joe, have you seen that?
Yes, and the next part we had here was to do with risk and some of the hesitation.
Okay, let me keep it for the next phase, but I want to just add one comment on that. Okay. You see the thugs, frauds, all those kind of people are everywhere in the world. You cannot, do stereotyping that only, people who do business in Uganda or Ugandans, they are the ones like that. They are reputable people. They are reputable companies here who do business and who are trustable. For example, Just if you ask in the real estate market, Isaac is sitting with us in the KCB banks, properties and developers who are approved by the banks, like us, we are in partnership with KCB banks. So there should be a certain level of comfort for the investor in diaspora that if any developer is linked to a bank, this means that they are reputable people. They have banks don't partner with anyone, or anywhere. So, this could be stereotyping if we say that everyone in Uganda is, trying to cheat and trying to eat up your money. That's not true. They are reputable companies. There are reputable people who have delivered in this country. Now, coming to the part of the question for Mr. Moses, on one part, he has given the, I think he's the one who has asked, the return of investments, if you compare it with the treasury bonds towards the condominium apartments, and then the return also. You see, treasury bonds are giving you around 15%. If you compare the real estate investment against the treasury bond is okay. You don't have much to do about it. You buy the treasury bond, you keep it with you, and you get your 15% return. But with property, you have it depends on the model of investment also. If you are doing a midterm investment, which I say is 7 years investment, if you calculate a 7 years investment on a good property, your returns are much, much higher than the treasury bonds. You see, because every year, if a location is good, though, this could be also very, you cannot put it in one corner, because some properties have good location, some have average location, some have, bad location. So it depends also. But in general, if you compare real estate with treasury bonds, in my personal humble view, it might be incorrect, but in my experience, the return of investments on property is higher than the treasury bonds. As I told you, the minimum, return of the minimum, rental return is between 12 to 18%. So if you just calculate the rental return, and you let alone leave the appreciation of the property, so it doesn't add up with the treasury bonds. Though treasury bonds are easy to manage, but now again we have the concept of condominium apartments or apartment living or shared spaces. So that is also something which can be controlled, which will go in the next phase, where we are going to address how condominium apartments or condominium properties more safer than the other properties. Now, coming back to the question for Mr. Moses, he asked, I think, on the returns, which I have partially answered. For the property side, for the real estate side, as I am telling you, that a minimum return on investment on a good property is not less than 30%. If you are putting up a house, maybe on 12 decimals, and you want to resell that house in the market, still you should calculate a 30 to 40% appreciation. If you are buying any condominium apartment with a developer at the beginning, when the project has started, naturally the listed prices at the beginning of the project is cheaper than the final product when the final product is there. Suppose I'll just give you one very recent example. We have one project which is getting ready in the next 6 to 7 months. Condominium apartments. We launched at a price of $97,000 in January. As of today, our selling price is $109,000, the least price. And when the property, after 6 months, or when it is ready to completion, the same property is $125,000. So you compare when a developer launched a property at $96,000 or $97,000, and the final price which he's offering to his customer at the time when the property is ready, and I'm talking a period of say 14 months, the price is $125,000. So if you calculate the difference, what return are you getting? This is the developer's price. Developers always sell property lower than the market price, because developers want to keep a leverage for the investor, that when he comes on board, he makes some bucks on top of that property and resells it. Because you can't squeeze the whole apple, or you can't eat the whole cake yourself. In real estate, you have to share the cake. One person can't finish the whole cake, you'll start vomiting. So you have to share your cake. So developers, for us, we keep a margin, we keep a cushion for at least 3 investors to come and squeeze the juice out of the orange. So, if you compare, we can have a very detailed analysis on the returns, but I would still strongly believe, and I strongly suggest that, the return on investment in the real estate side in Uganda is much higher as compared to the treasury bonds or as compared to any other options which are available. Even a fixed deposit in a bank does not even give you that much kind of money. And when you are doing business, so every business comes with a risk. That minimal risk has to be accounted for in the whole portfolio. You can't do business on 100% surety that you will get this kind of a return. But honestly, the returns are quite impressive, and something which is very, they are not something which you invest and wait for another 10 years. Uganda is a growing country, is a growing economy. Kampala 5 years back was not as it is today. Kampala even 1 year back is not as it is today. As Daniel has told you, the road networks, as Daniel has told you about the infrastructure which is coming up. So we have a very bright future. Let's be optimistic, and let's call a spade, to be honest.
Okay. Thank you, Zahil. So I'll add one point to Mr. Moses' question. I think he wanted to know the comparison between treasury bills and real estate investment. So I'll add my 2 cents. When you're investing in treasury bills, it's a purely cash transaction. So if you have $100,000, you can only buy treasury bills worth of $100,000. So the 18% will be on top of the $100,000. So after the coupon expiry of say 30 years, you get your quarterly, or every 6 months you get your coupons. But at the end of the 30 years, your returns are on only the 100,000 you put in. Whereas in real estate, the 100,000 you put in is just a down payment to get an extra 80%. So you have 100,000, which is 20%. The bank adds on another, where's my math? Is it 240K? We're about to give you a bigger pie, which is what you're investing with. So by the end of the 10 years, your 100,000, not only has it multiplied, but it's multiplying at a bigger scale. So the cash on cash return might be the same, but you have a bigger return in terms of total valuation. So I hope that helps a little bit, because I was comparing the cash on cash return versus the asset appreciation in terms of how much the down payment was. And at the end of the maturity, if you want to sell your property after 10 years, what are you ending up with in terms of the total?
You see, Joe, I'll take another 1 minute. You have gone in details in the mathematics. Though I made it very, very grounded statement that the returns are high. Okay, let me give you another statement, which we all of us know. The easiest and the most, efficient way of making money in the world is either by brick or mortar. This is a very famous saying. You make money either by brick or by metal, whether you are in the construction industry, or you are in the real estate industry, or you are in the in the metals industry. That's why they say you make money in brick and metals. You can say treasury bonds or any other kind of bonds. You have some kind of returns on that, but if you want to compare those returns with brick and mortar, there is no comparison. It's not possible. They are two different. You can't compare an apple with an orange. The comparison of an apple should be with an apple. Treasury bonds or any other kind of bonds, they give you a certain return. Same, maybe like it is the same example. You can't, you see, insurance companies, they give you many options, that you invest for a period of 10 years. And on top of that, we'll give you 15% or 17%. But that has nothing to do with the returns which you get with real estate.
Awesome.
It's something which makes your portfolio, as Dan said before, that maybe you are not an investor, you are a first-time investor, but you are making a legacy. So whatever you are putting, maybe you start with buying a small plot, a small apartment, and then you increase your portfolio. Maybe after 5 years, 10 years, 15 years, you have a very impressive portfolio. So they are two different things which have no comparison to each other, I would say.
So to add on this discussion, which is really good, Pam in the chat here had a question. He started off, Pam, do you want to unmute, or I can try to bubble through your question? So Pam says she had a rental property that she started with, and then she's had some renters in there. She wants to sell the rental property and be able to buy apartments. Isaac, this question goes to you. how would this be achieved? Probably she has maybe 3 or 4 rental properties that she wants to sell. How is it possible to transform this small asset into an apartment block or something bigger with, say, Lamar residence or something like that?
Thank you, Joe. If she has a property and she believes she can sell, she wants to sell it, what we normally do, we have real estate agents in Uganda who are registered, also partnering with us. So what we do, we link her to the agents, and they put the property onto the market. Okay, and when the property is purchased, then we can still link her to the developers like Ali to sell to her the apartments. But on top of that, she can still remain with that property, because I'm wondering why she's selling it. Because if she has tenants there, it means there's some cash flow that is coming through. So she can use that same property and release equity out of it. Release equity out of it to make the down payment onto the apartment. And she uses the cash flow from that property together with the cash flow from the US or wherever she is to finance the mortgage on the apartment. So for me, I wouldn't advise her to sell the property. What I advise her to remain with that property, release equity out of it through a facility, okay, to have a down payment, and then get a top up for the mortgage onto the apartment. At the end of the day, she will have 2 properties, one being financed and the other being owned.
That's very good. So she's appreciating both her old property, the appreciation is still going up, and then the new property is financed, and she's able to get both cash flows on it.
Exactly. People are buying property in Uganda. Why do you want to sell yours? I wouldn't advise that. Let me give you some statistics here. Last year, Uganda Bureau of Statistics published an article where it said that Uganda is growing, has a growth rate of 3.3%. And urbanization rate in Uganda is at a rate of 5.67%. Out of that, the total population in Uganda has grown. By last year, it was about 43 million. That's a big population. It's growing very, very fast. And out of that, there is a shortage of housing of 2.4 million units in Uganda, shortage of housing. Meaning, these are guys that are earning income, but don't own properties. They are looking for properties to rent out. You get it? So that is an opportunity. And according to the numbers, they say that for us to bridge that gap, we need to produce about 300,000 housing units per year, which needs developers like Lamar to bring those housing units, because there is plenty of middle income earners who are coming through, being in these corporate companies, but don't have where to reside. They would want to acquire, they would want to let out, to rent these properties.
Isaac,
so that is the we have.
Draw some light on the current trends of people, instead of buying a cheap plot in, say Mukono, where they are commuting from Mukono to come and work in Kampala and go back and forth, and they end up losing 4 hours in traffic. Talk about the current trends of people now turning into buying condominiums, so they cut down on the commute time and increase their own personal productivity. What are for people who are not on ground? What is your observation? What are you seeing?
The observation, actually, what I can tell you, Joe, is that it has been out of experience we have learned the need of location. You can ask Ali. The first thing, there are three things that you would like to ask a developer or a person who wants to earn from real estate. What are the three things that you would consider for you to buy property? The first thing is location. The second one is location. The third one is location, meaning that if you have a property that is located in a very accessible area, it means that property will appreciate. It means the people who will reside in those properties will not, if for example they are renting the properties, will not leave those properties because they have accessibility to their workplaces, accessibility to the shopping areas, accessibility to the hospitals. All the amenities are closer to them. Why would they go somewhere where they are going to look for the facilities, yet they are not there? So the middle income earners and high income earners have noticed that they need to live in residences where it is easy to access the facilities that they need to survive in life. And that is location. So that's why they have ended up acquiring properties that are closer to all the facilities that are required for them to survive in life. Thank you, Joe.
Thank you. And the gig economy, people who need internet all the time, we've seen that it's basically Kampala, you have the fastest internet. You can easily network with other fellows in the evening. So being close in the center of action has really taken off this real estate boom. And then lastly, before I leave you and go back to Daniel about fraud, quickly, Isaac, there was a question that came through about equity release. Can you explain what equity release is? You use that term loosely, but for a layman like me, break it down. What do you mean by equity release?
All right, thank you, Joe. Now, we've been talking about the double, that when you acquire property, real estate, it gives you two cash flows. One, okay, I won't call it cash flows, two inflows. One is cash flow, that is in form of rental income, that is if you're hiring it out. Then the second one is appreciation in value. Now, in finance, that appreciation in value is what we call equity. Okay? If you bought a property at around 100,000, and that property, for a span of say a year or two, the property will appreciate in value. So meaning the equity that was 100,000 will rise to probably 150 or 200,000. So it means you are, if it rises to 200,000, it means you are 100,000 more richer than you were at the point of purchase. You get it? So in business, what we tell you is that why do you leave that money redundant, hanging there in a property? Yet you can use that money to invest in more property. So what we do, since we have termed it as equity in that property, we tell you that you can release equity out of it in form of cash. By us as a bank, KCB Bank, we lend money to you. We release equity out of that property in form of cash. Okay? And we give it to you.
Isaac, what you're saying, and I'm having some connectivity issues a little bit. So what you're saying is you can have
that you invest in other projects where you other property. Yes, you're saying something?
Sorry, I was saying I was having some connectivity issues, but I think I get your point. Is if I have a property, an apartment block, after 1 year, I can actually come back to you and say, hey, look at all this money that's in my apartment right now. Can you give me a second one? And after 3 years, I can come back and ask for a third one. After 5 years, ask for...
Exactly. So you can acquire as many properties as possible in the shortest time frame. You get it? By way of releasing equity from one, you use it to make a down payment on the other. Remember, the cash flow is increasing every now and then. You purchase another property. You get the point?
Thank you.
The cash flow increase, qualify for more and more facilities, and you acquire more and more properties. At the end of the day, you'll be a tycoon.
So let me get to this point then. Councillor Daniel, and Mr. Moses brought it up. He has a group of Ugandans. They've been able to invest, collect money, they bought property. But the issue is, why aren't more Ugandans doing this? Because of fraudsters, they're afraid of the risks and all those other things. How do you, one, what are some of the legal aspects you can talk about when it comes to creating an investment club? And then two, what's the, how can you comfort the diaspora people? How can you give them some assurance of, in terms of protection and risk, and how do they know their investments are safe, so to say?
Okay, thank you so much, Joe. The first thing is you need to work with the right people. And there's no question about that, because there's no way about it. I mean, for you to get, if you're going to get a great house, you must hire the best professionals, you must hire the best architect, you must hire the best contractor to lead you through the way, who will hire the best builders to support you. And even the finishing, they will get the best landscaper for your house. So for you to ensure that you actually get the right way out while doing with this, because it's business, you have to make sure before you reach out to call someone who studied law who was your friend, or to get a reference from a relative to support you in the transaction, to get you a broker. It's always better you do things professionally. The reason why we are able to come for these informative sessions is because KCB sat down and looked out at the kind of partners that they can work with, and who can guarantee that in case of anything, they are able to support the people in diaspora. So it's the same advice I give the people in diaspora. I mean, I have quite a number of clients in the diaspora, but the first thing is, even we lawyers, we have what they call rankings. There's the IFL, these are global rankings that establish the quality of the top tier firms on the market, the quality of the lawyers you're working with. We are regulated, the profession. I mean, it's always good to do things professionally. The experiences I've had with transactions in the diaspora is that, and we've seen quite, the previous conversation I had, I indicated quite a number of, I give insights on quite a number of scandals that they have gone through while dealing with people in the country. But it doesn't mean that they are not success stories. The success stories are actually so many. It's just that you just don't get the time to understand what is actually happening. So I mean,
Council, I think that's a good lesson learned. Next time we are going to open up with some success stories, or in the middle we talk about some of the success stories.
Exactly. So the key thing is that on the daily, there are quite a number of people. We do support quite so many people on a day-to-day. Actually, our mantra as AB and David is that we exist to support, to ensure that our clients' businesses succeed. And beyond just making sure that we do the transaction and close on it, there is the support that you need to offer to ensure that, I mean, if this guy is registering a company, if he's starting up an investment club, where does he want to end? Where is the kind of board support that he needs, the returns that he needs to file, the investment advisory that he needs to obtain? So it's a long journey that you have to undertake. The biggest challenge we have on our market and in Africa is that people always want one-offs, and they also wanting to save, to cut small cuts, and to take professional services like it's like a trade of maybe business of beans or potatoes. So you compare rates, and at the end of the day, you get a cheaper option, I don't know when you get out, someone defrauds you and you have nowhere to get the guy. So it's the biggest challenge that we have on our market. So if you ask me, you need to go for the best, you need to do due diligence, you need to even get a second opinion. I mean, if Daniel gives you an opinion about how to support your trust that you're setting up, you have a right as a client to actually reach out and ask another lawyer and even compare prices in terms of the opinions, the fee notes. And then on that basis, you select who you will work with. But like I said, it's always good to go professional.
Awesome. Thank you so much, Council. And I'll get back to you, Diane, to talk about the need for professionalism. I have a couple of hands raised. Mr. Moses, if you don't mind unmuting and asking your question, please go ahead.
Yes, can you hear me?
Yes.
Okay. I'm not really going to ask a question per se as much as make a couple of comments. I happen to have met with a Kenyan investor just yesterday. The Kenyan community in Georgia came together. Unfortunately, their investment plans run along tribal lines. This investment in particular, it's a SACCO, it is primarily Kikuyu, and they have somewhere in the region of $1.5 million. They raised $1.5 million, and with that, they were able to leverage another $1.5 million from a bank in Georgia. They went to Kenya with $3 million, and the development is already up and going. It's in Kitsu something or other. I can't remember the name of it. They're putting up, I think, 80 condominium units. But the bottom line is that they partnered with other investors in Kenya, and it is working very, very well. There we go. You got it. That's exactly it. You got it. You got it. That's precisely it. Now, I can't even go any more than that. You have got the information right there. I reached out to these folks in Georgia, and they did tell me that yes, they are doing this, and they're very successful. Not only that, they have now opened their group to investors from other countries, diaspora countries, and they have some in the region of 1,000 people. The average investment is $6,000. The lowest investment so far is $6,000. Now, just think of that with 1,000. By the time, anyway, they're very successful. Anyway, so the Luos, I hate to put it this way, but the Luos who are not allowed to join that particular circles got together, and they themselves have started raising money. And they are already over $1 million themselves. Again, they're coming out of Georgia. And they are already building in, where are they? Anyway, it's the second biggest city in Kenya, halfway between Kenya and Uganda, that Nakuru. Is it Nakuru? Anyway, one of those. So again, they have a significant number of Kenyans who have come together and are building, and the buildings are already off the ground. Now, this particular gentleman I met with yesterday was from that particular group. We're sharing information. We're talking about different developments. They are more open to other people to invest. I'm not asking a question. I'm just saying that we as Ugandans, we have not got to that stage. How do we get to that stage? When we go to a unit convention, we leave $1 million in whatever host city there is. That is what we spend in 3 days. $1 million, easy, plus. I'm not saying that that is money that we take and we then invest. I'm just saying that we have the potential. But what we don't have is the trust. We don't have the leadership. We don't have the vehicle. And that is what I'm looking for, is leadership. How do we get the Ugandans here who have the money to do something along the lines of what the Kenyans are doing? Thank you, Joe. And this is an excellent forum, and I appreciate you allowing me to say a few words.
No, thank you so much. We need that. We need that a lot. Thank you so much, Moses. Next, Madam Namanda Prosi, you had a question, please?
No, it's not really a question, but thank you for your time. In addition to what the council said, I just got saved. That was last year by a council. I wanted to buy a property in Uganda. My mother was going after the property. She knows, she's clueless about these mortgages and everything, but she thought she was smart. She knew the LCs and everybody. So what happened last minute, I remembered my in-law, he's a lawyer, so who went in to check out the land and everything. It was actually a house built already. It was a very nice property around Kajansi. So what happened was this council noticed that there was a minor. There were 3 people on the land title, and one was a minor in South Africa. You know, so this is something my mother did not even consider, but she was rushing for the property because she said it is easy for her to supervise. She's old. It's here near her home in Reza, you know. She's considering other things and she did not consider much of other important factors. So it's just an additional input to what the council was saying, that it is really, really, really important to involve people, not just a council, but someone who has the expertise to learn things, right? Not just a lawyer that you know, because he mentioned a family friend. It may not be just a lawyer, but someone who has experience with this, because he said he asked many questions about the minor and there were little answers. I lost out on the property. To my mom, she felt like she lost on a good property that was ready to bring in for me some rent right away. But me, I was grateful that I didn't take on the property. That is my input. Thank you.
Thank you so much. Pam, you have your hand raised.
Yes, hello. Thank you for the platform. Yeah, I wanted to comment on the purchasing of property in Uganda as a circle. A few years ago, a group of my friends here in Europe, we wanted to collect money like the Kenyans do and then buy property in Uganda and develop it. But the paperwork became tedious. One, you need a national ID, then you need this, you need that and that. So it became so impossible for us because most people here, like in Germany or Netherlands, you have German citizenship, or we don't have dual citizenship. So we actually failed to get property because of that.
Very, very good question. Isaac or Councillor Daniel, do you mind taking on that important question? And it goes back to Wilson's comment to Mr. Wilson, what he said. How easy is it to create a circle or investment club? What's the paperwork, or what's the easiest way to create like a hassle-free association that can start investing? Councillor Daniel or Isaac, anyone taking on that?
Okay. Yes. Council, you can take it on if you can.
Okay, thank you, Isaac. It's not as complex, but the key thing is that you just have to maneuver the laws that are in place. I know for a fact most of the people in the diaspora haven't got a national IDs, but it's a process that they can also undertake. Like I indicated earlier on, there are quite a number of embassies that are now offering that kind of support to people in the diaspora. But in addition to that, I mean, if the challenge is having the national IDs, there are rights that non-Ugandans can as well utilize. I mean, there are rights that are provided for within the law that they can take benefit of to be able to acquire land. You may not acquire a freehold land or what they call Milo in Uganda, but you can as well acquire leases that you can put on your property. So it's not true that because you don't have a national ID, you are unable to acquire property in Uganda, or because you have a citizenship of another country and you renounce the citizenship in Uganda, you are unable to acquire property. It's just a question of,
So if they are creating an investment club or circle, do they all have to present IDs? There are 200 people, or can just a committee of a few members incorporate and go on to create this? Is there an alternative?
You don't need to all be there. What you need to do is you need to have promoters, what they call the initial subscribers. And then you create a provision within the memorandum and articles that shows that the procedure in which the other members will get on board as members, and you have a list of the members. So you don't need to have everyone provide the details. And it's not also true that everyone must have a national ID in Uganda to be able to incorporate a circle or a company. What they need are the particulars from the individual. The only issue would be the rights within our land tenure system that you'll be able to acquire. If majority of the composition of the members are non-Ugandans, so you will acquire rights as a non-citizen company or a foreign company. And a foreign company can own land, but can own freehold. It cannot own freehold, but can own Milo. Not Milo, but leases, because freehold is the same as Milo. So it's just a question of structuring. And like I said, getting the right professionals to support. And all these things are important. I also wanted to highlight on what the gentleman indicated, the structuring that the guys in Kenya have done. It's just a question of, you can't have everyone like at UNA get on board and have the same mind of thinking. But if you can have key players with the right mindset and with all these financial institutions and as well as the organizations that we have on board to come in to support the mindset that has a dream of establishing something similar with what the Kenyans have done. It's possible, but you need to have a starting point. That's what I believe in.
Thank you, Council. To the members, we have 8 minutes left, so I'll be taking any last-minute questions. If you have any questions, please raise your hand. I'll give you 30 seconds to think about your question. If not, I'm going to go back to the panelists for 2 minutes of closing remarks. This has been a wonderful discussion. I think we've got our topic for the next session, which is going to be investment clubs and how to unite to become a big force. So we'll probably have to invite Mr. Moses Wilson to discuss that. I think it's great interest right now. So if I don't see any questions in the queue, so I'll go to the panelists for closing remarks. I'll start with you, Isaac.
Thank you very much, Joe. I would like to close with these remarks. KCB is a well-established commercial bank in Uganda. We have been here for 16 years now. KCB Bank has 13 branches in Uganda, but is very passionate with digital banking, where the diaspora community, I believe, should follow. Because if you're in the diaspora and you need to monitor your finances, you need to monitor your assets, it means you need to be so digital. And that's where KCB is. KCB is not only in Uganda. We're in 7 countries all over East Africa. We are big in that in the region, so meaning we are a very stable bank. So I would encourage all the diaspora community to trust KCB Bank, to be able to move the journey with you from the time you feel you are interested in buying a property to the point where you are going to occupy, or you're paying, you're occupying the property. We are willing to move through the journey. We have a number of professionals that we work with, such that the risk is managed well. So we trust that through our connection, you'll be able to succeed in one, procuring the property, secondly, in managing the property. Then I also want to mention to you that even if you don't have a national ID, but you have a passport, there are several ways. There is that alternative that Council has talked about, whereby even if you are buying a property, a Milo property, what we do is that we request you to provide a relative whom you can trust the Milo, and the relative leases you, gives you the lease ownership. So in that sense, you'll have the ownership of the property through a lease, having transferred the Milo to someone else. So at the point when you achieve
I mean, obtain the national ID, and you can reverse back and own the Milo if you really want to own the Milo. So that alternative is there. And we have lawyers like Counsel Daniel who are able to support us and you to be able to go through that journey. I would like to say that the bank is open through the diaspora department to be able to support you all the way, from opening an account, from giving you feedback in regards to your account operations, digital banking, everything related to your account and managing the facility will be supported by KCB Bank. So I request you to onboard. Let us open these accounts. Let us look for these properties. Let us procure the properties, and let us get richer and richer and richer, and develop Uganda. Because why would you be in the US and not develop your mother country? Because at one point you will need to come back to Uganda, and when you come back to Uganda, they will ask you, what have you been doing? And that is the property you will show them, or those are the properties that you will show them that are worth your sweat. So I thank you very much, and I look forward to having another engagement. Thank you very much.
Thank you. I think KCB has taken the lion's share of the Ugandan time. So we'll jump to Diane. Any closing remarks from your side in 30 seconds?
Can I say something?
Sorry, please.
Can I ask something before Diane? Because I want to ask.
Okay, Nora, please go ahead. What's your question? Yeah,
I opened up my account in KCB, and when I traveled, I left my sister operating it with my ATM, and it was operational until about 2020, 21. They declined my ATM card, and I cannot operate my account. So even when she uses the ATM to go deposit or withdraw, it's declined. So how can I be helped that I can transact on my account? I don't know what's happening on it as I talk now.
All right, thank you very much. What we're going to do, I'm going to put the numbers on the chat.
Yeah.
Bridget is the diaspora RM, and she's going to be able to sort all the issues. Get the new ATM card. You'll be able to first be able to reactivate the account, because I don't think that is still active.
It should be active, because when I deposit money, they can't deposit on the counter, but they can't give the balance. They can't nothing, but they take the deposits.
Yes, an inactive account can take deposits.
Oh, okay.
So we allow deposits.
Okay.
Withdrawals, you need to reactivate it, because we need to safeguard your money. So why would you leave your money out? We need to safeguard it. Then when you come with the right requirements, reactivate it.
Wow. So I'm gonna try to reactivate it here, or while I'm here?
From there. Yes, while you're there, we're going to send you a list of documents that you're going to provide, and then we shall be able to reactivate it.
Joe, I wanted to be just a little bit sensitive because I have to get going at 3 p.m. And I know that, I'm sorry, Isaac, to interrupt. I know you guys can deal with this later. I just need to close and go. I'm so sorry.
Please go ahead. Nora, I will get your contact and get you sorted.
Sure.
Thank you.
Thank you so much, though. I didn't mean to interrupt. It's just I want to be respectful of everyone's time. That's all. My closing remarks are, I think that being part of real estate and being part of this conversation is a privilege, and real estate, I think, is the greatest thing that has happened to all of us. Everyone needs a home, and after owning a home, then you need an investment, and it's generational wealth. And no matter where you are, land is an asset. Real estate is one of the least volatile forms of investment. No matter where you are, property is going to appreciate. we've had in Uganda, it's appreciating. Even here, it appreciates, and I'm sure in every other part of the world, it just keeps appreciating as the population grows and as we get more business centers. So this is nice that Joe, you've done this. I'm also happy to hear the updates in Uganda, but they're trying to reduce on the risk. I think there is more that can be done together with the executive, the legislature, and the government, right from the laws to the ethics. I know that there are many success stories, even though as diasporans, we've had the worst of it. And of course, bad news travels faster than good news, so it's not surprising. But I'm sure there can be more ways on improving the system. And, I'd be happy to share on that as a professional who's had a lot of experience and expertise here in the US. I think so many things can be easily transferred to just improve everything for both diasporans and the people back home and, everywhere, the whole thing. What else? I think that's pretty much it. Remember, it's always about the location. Location. That's our mantra in real estate. Where are you buying? Is it a prime location? What's the return on investment? Does it support your lifestyle? Where are you in life? Am I retiring? Am I young and energetic? Am I just a simple person? Or am I overly ambitious? I want to develop the whole world. That's all. Thank you.
Thank you, everyone. In a few seconds, Haji Zahir, closing remark.
Joe, thank you for having us here. It was a very interesting discussion. I think we all got some, very informative things here. We are always here to help the diaspora community there with the help of KCB Bank. If any mortgages are needed, we have an upcoming project which is ready to be handed over in the next 6 months. So if there is anyone who would like to invest with us, we are there for you. I think they can get the information from you. And I wish best of luck to everyone. And we should have more engagement like that, which is very informative for the diaspora community. And we could address their concerns. But thank you very much for having me here.
Thank you. And Councillor Daniel, last word.
Thank you, Joe. Once again, I would like to thank you all for listening to us. It's always good to be part of this conversation that we started. We believe that as we keep going, there will be quite a lot of things that will benefit from. Of course, we at AB and David, we believe that as the world keeps changing, we believe that it's those that will take benefit of the opportunities that are in the new markets that will actually leverage much more than the others. We believe that Africa presents itself with quite a number of opportunities that are much better than the world that is saturated. And as AB and David, since we are present in Uganda and across Africa, we are willing to support. We are willing to offer the support so that you do your transactions risk-free and really succeed in your business. Thank you.
Awesome. Thank you, everyone. Again, this is precious time for everyone from the Pacific to Uganda on the East African time. I've been your host, Joe Kakumirizi. Looking forward to yet another discussion next month. Stay tuned from your chat rooms, on your LinkedIn, on your social media. We'll be putting this together as more frequent as possible to get the community engaged and going. Subscribe to the WhatsApp group. Get in touch. We want to continue the discussion going on the WhatsApp group about the Real Estate Investment Club and how we can energize our community. So thank you, everyone. Thank you again. Have a wonderful weekend, and God bless you. Bye-bye.